Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got a bit of a profit-taking session of sorts as we see markets play out with some doubts about the sustainability of the artificial intelligence bull trend. So the broad market index, S&P 500, down 0.6% to 6,657. And the Nasdaq Composite dropping nearly 1% to 22,573. The losses of Nvidia, Oracle, and Amazon weighing on the Nasdaq, and the Dow Jones Industrial Average dropping 0.2%. Let's check in now with Laila Pence. She is the president and co-founder of Pence Wealth Management. Good morning, Laila. How are you doing today?
I am wonderful, Ryan. How are you?
I'm doing great as well. Good to hear from you, and of course, great to have you on the show. Let's talk about what's playing out in the markets right now. We've been looking at September as what has been described as a seasonally poor month historically, and we have had record highs in the past weeks, but now it looks like things are starting to fade somewhat. What have been your takeaways so far?
I think it's been a great month, and I think it continues to do well. I think day to day, like you said, it's a little bit of profit taking, but after hours, I already see things doing better, and I just think there's so many drivers to this market that we're quite bullish at this moment on the markets, and we would love to have a little bit of more volatility, a little bit more buying opportunity, but certainly we're, with the potential of even lower rate and good GDP numbers, I don't think we're going to have any, sustained downside risk. We welcome some. That's part of the markets, but right now, things are doing quite well.
Yeah, let's unpack some of these drivers for markets. We are, of course, talking about what's playing out for the U.S. economy, and to your point about how the GDP numbers played out, there is a certain extent that it's backwards looking. How much optimism is there going forward?
Quite a bit of optimism. In the Federal Reserve survey, they do actually increase the level of GDP higher, and anticipated going higher, and they do in terms of the markets. We have record profits right now. We expected $2.69 per share in profits for 2025, and we're expecting 2026 to be up to $302 per share. So earnings estimates are quite good, and then historically, when you have rate cuts, those have been very good for the markets. And then of course we have the AI side of the market. So you have three things going. In addition to that, we also have the tax bill. That is a huge driver, I believe, for earnings and corporate profits, because there's a lot of incentives for businesses to spend and get huge tax benefits from spending, deducting things instead of depreciating it. So we do see quite a bit of investments from big companies between now and the end of the year, and of course the next couple of years, because they can reduce their tax liability. And then there's a lot of tax incentive for the individuals as well. So, and that's not being taken into account. And we do think that there'll be a lot of the middle America, anybody making really under $500,000 should get quite a bit of tax cuts, and they should get some refunds next year, which will give them money to invest, not to invest, basically spend. And when people spend, markets go up.
Okay, so potential upside for markets on that front. How much are tariffs being priced into that scenario right now, where you have still quite a bit of deal making going on?
The tariffs are really there to hopefully reduce the deficit. But really, if you notice lately, there's really have not been a lot of talk about tariffs in terms of markets, because the tariffs are borne. They're not just borne by the consumer or the producer or the companies. They're borne by all three. So they're being absorbed, and they're really a one-time thing. But on the other hand, it's going to bring in revenues to the United States and to the Treasury, which is helping offset the tax cuts that were just made. So we think tariffs are not as big of a thing as far as the markets are concerned right now.
All right, let's talk about what's playing out in the field of AI. And this involves some of the big tech companies in the U.S., where Donald Trump is pushing for a $100,000 fee on visa applications annually, possibly. So it's something that could weigh on some of these big tech giants when it comes to hiring foreign workers. How much is that going to weigh on the prospects going forward?
Well, I think companies that need these professionals and will pay it, but it will weigh on some of these companies. But of course, there's quite a bit. If you look at the unemployment numbers, they really are mostly from the newly graduated students, and many of them would love the opportunity to work for many of these tech companies. So the idea is to maybe look inwards and hire some existing very smart graduates. I know my daughter just graduated, and she tells me that many of her cohorts are not finding jobs as easy as she is. So I'm sure it'll have some effect, but it's not a dramatic effect for these companies. And we don't know what the final numbers will be, but certainly it's not a big enough reason to reduce their earnings or anything like that. Especially with AI right now, there's so much AI is replacing a lot of the employees, and that in itself is one of the reasons companies are being more profitable, because they don't need as many employees to do the same work that they used to just a year ago.
Yeah, tough times and a lot happening and changing in the tech space. Let's take a look at what's in your portfolio right now, at least what you're optimistic and what's looking attractive. We've been talking about how small caps have been catching up with some of the big boys. Is there a space you're rotating more towards right now?
Yeah, I think for the first time, finally, we're starting to see a beginning of a rate reduction cycle by the Fed. And small companies do a lot of borrowing because that's how they grow. So short-term rates under loans make a huge difference in their cost of capital. So if you reduce your cost of capital under borrowing, that will make them more profitable. And also with a lot of the new tax bill, where it's very pro-U.S. companies and small cap and mid caps, and they've really been left behind. They have not had the appreciation and the growth that many of the large companies are doing. So when you consider lower debt, tax bill, and more people spending because of the tax bill, we think that it's time to look and allocate some of the funds into small to mid cap.
All right. How are you thinking about financials? Because with lower rates, typically banks would not be as profitable. So what would that mean for the financials space?
Well, on the other hand, because many businesses were not borrowing as much and many individuals are not borrowing as much because interest rates were so high. So if you have a cheaper cost of capital, that will be good then. But really the main reason we like financials is we have a huge, robust IPO pipeline and M&A deal flows. And many of the financial companies here are also investment companies. And with the fact that markets are all-time highs and the amount of trading, the amount of investing is going on, they really are making more money than ever on that side. And also the M&A is, we haven't seen M&As like that in many years. And we've had pretty much a deal almost every other day. So there's been a lot of pent-up demands for that. And we do see a huge cycle, and that bodes very well for our financials.
All right, more listings perhaps to help boost markets, and of course the risk appetite with the new highs on Wall Street could help valuations. We've been in conversation with Laila Pence. She is the president and co-founder for Pence Wealth Management. Laila, thanks as always for your time and insights. Great chatting with you.
Thank you.
All right, catch up with you again soon, Laila. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.